Welcome back to the Crypto channel, everyone. My name is Josh, and this video is slightly different from my regular type of videos here on the channel because this is a Bitget tutorial video. And one of the main reasons why I'm making this Bitget tutorial is because Bitget is actually one of the few exchanges right now with a complete proof of reserves system, which is very important. And on top of that, they also have a $300 million protection fund to help secure their users, which is a big deal. And so in just a moment, I'll be going into more detail about all of that. And of course, I'll be showing how to long and short different types of crypto with leverage. I'll also be showing how to buy and sell crypto without leverage. And later in the video, I'll be covering automated strategies like grid bots, for example, copy trading, all of that and more in this video. So make sure you watch to the end. First of all, before even talking about the sign-up process for Bitget, getting into perhaps the most important part of this video, which is of course the proof of reserves. And in case you don't already know, proof of reserves basically prove that the exchange is actually holding all of the customers' crypto that the customers have deposited onto that exchange. And so if you scroll down on this page, you can see the total reserve ratio for Bitget. Right now, as of recording this video, it's sitting at 244%, and what it needs to be sitting at is at least 100% or more. Because basically, let's just say if it was sitting at exactly 100%, that would mean that Bitget, the exchange, is holding exactly 100% of the crypto that customers have deposited or have traded onto the exchange. And so essentially, if this number was 100%, if all customers on Bitget try to withdraw their crypto from the exchange, then all of those withdrawals would successfully go through and no crypto would be left over if this was 100%. But because this is a lot higher than 100%, once again, it's 244% as of recording this video. And so what this means is that all of the customers on Bitget can withdraw all of their crypto from the Bitget exchange, and Bitget would still have a lot of crypto left over even after everyone takes their crypto offline. And now there's a saying in crypto, don't trust, verify, which basically means you don't have to just trust these numbers. You can actually verify these numbers yourself with Merkle trees. And now I won't be going too much into detail about Merkle trees specifically in this video because that's a topic for a whole nother video. But basically this right here is the current Merkle root hash as of recording this video, which is basically a way to verify crypto assets are there on the blockchain and held by Bitget. And you'll notice that this Merkle root hash will actually change over time as crypto balances on the exchange changes over time. And now if you scroll down further on this page, you can see the exact reserve ratios for different cryptos. And if you scroll down further, you can see a description of proof of reserves, why it's important, all of that stuff. Scrolling down further, you can see the exact crypto balances on different blockchains and exactly how much of these cryptos are owed to users and also how much of these cryptos the platform itself currently holds. And if you scroll down even further, you can see all of the Bitget public addresses right here, which basically shows all of the crypto held by Bitget in their reserves in these public addresses. Obviously, we have Bitcoin addresses, we have Ethereum addresses, we have multiple USDT addresses on the Ethereum blockchain, the Tron blockchain, Solana, Binance Smart Chain. All of these addresses are public and you can verify their account balances, all of that at any time. And the Bitget exchange have actually gone one step further because if you scroll down even further on this page, just below this explanation of how Merkle trees work, you can see how to actually verify my proof of reserves. And what this actually shows you is how to verify your specific crypto that is in your specific Bitget account, how to verify that on the blockchain and make sure it actually belongs to a Bitget address. And so once again, they have all of this information about their proof of reserves on their website, and how to access this page right here is by scrolling all the way to the bottom of any one of their pages. And under this privacy and regulation section, the second one down is proof of reserves, which takes you to this page right here. And now on top of proof of reserves, Bitget also have a $300 million protection fund, which is essentially set aside. This is on top of their reserves, and this is currently made up of 6,500 Bitcoin and 200 million USDT. And of course, you can also verify these amounts by looking in these wallets. And for example, just clicking on wallet 1 and wallet 2 right here, that brings up a blockchain explorer where you can see the address, you can see all of the transactions. And in this first wallet, as of right now, they have 3,300 Bitcoin. And in the second wallet, they currently have 3,200 Bitcoin. And so obviously between these two Bitcoin addresses, that adds up to 6,500 Bitcoin, which is worth roughly around 100 million US dollars as of recording this video. And obviously you can also verify all of these wallets for their USDT, which as of recording this video are sitting on the Tron blockchain. And what this Bitget protection fund is actually for is, of course, if anything bad happened to Bitget. So for example, if in an unlikely scenario, the exchange got hacked, which is technically possible for any centralized exchange, then that is when this Bitget protection fund would come in handy. And by the way, how you can find this page right here is by going up to the top of the page, hovering over these 9 squares and looking at this page right here, protection fund. And so it's due to reasons like this and this as to why I'm starting to use Bitget more and more for myself as an exchange. And in case you didn't already know, Bitget is currently a top 5 exchange listed on CoinMarketCap and a top 5 exchange on CoinGecko with trade volume in the billions over the last 24 hours, and it was actually founded all the way back in 2018. But anyway, with all of that out of the way, let's get into how to create a Bitget account and begin trading. And now to head over to Bitget, all you need to do is scroll down below this video and you'll find a link like this in both the description of this video and in the pinned comment. And if you simply click that link right there, that will take you straight over to the Bitget sign up page where you can actually claim a massive bonus, but unfortunately this bonus is not available if you don't click this link. This link actually gives you access to some of these bonuses. And now just a disclaimer, even though I am not paid to say anything specific in this video, this link right here is indeed an affiliate link, which basically means both you and I can get a bonus from using this link. And so obviously you can benefit from this link and it also helps support the channel as well, and I do appreciate that. And now when you click on that link in the description or in the pinned comment, it will bring you over to this page right here, which is obviously the sign up page. And on this page, it also explains how you can claim these exclusive bonuses. For example, this first bonus is literally just signing up for a Bitget account, and that can get you 10 USDT futures trading bonus, which is basically $10 you can use to trade on Bitget. And there's also other bonuses, like for example, deposit at least 100 USDT and get 10% payback of that deposit, capped up to 150 USDT bonus. And in fact, if you scroll down further on this page after you click the link in the description, you have even more bonuses here, which you can read for yourself how to claim these bonuses if you want to. But anyway, to make an account, all you need is simply an email or a phone. And then once you put that in, you obviously set a password and click sign up. And what's really cool about the sign up process is that unless you actually want to deal with fiat currency, so unless you want to buy and sell crypto with fiat currency out of a bank account, for example, then you don't actually need to KYC. So you don't need to go through the whole ID process of signing up. You only need to do that if you want to raise limits on your account or if you want to deal in fiat currency. But if you already have crypto ready to go on another exchange or in another wallet, for example, and you just want to trade that crypto back and forward, then you can actually use this exchange if you're simply trading crypto to crypto and depositing and withdrawing in crypto, which once again makes the sign up process a lot easier without the KYC. And And now I've just hidden my face cam so that you can see all of the buttons that I'm pressing throughout the rest of this tutorial that otherwise might have been blocked by my face cam. But anyway, once you've made your Bitget account, to continue the account setup process, it is important to navigate up here and head on over to account information, security settings, and ID verification. And if you head over to security settings, that will bring up this page right here where it is important to set two-factor authentication, such as Google Authenticator or another mobile phone, for example. And on top of that, it's also important to set a funding code, which is basically a PIN number that you set. And this is needed for withdrawals. When you eventually withdraw crypto from the Bitget exchange, it will of course ask you for verification, making sure that you are the one actually making the withdrawal on your account. And for that, you will need some sort of two-factor authentication and a funding code, which is that extra PIN number set on your account. So it is important to set up these security settings so that they are ready to go once you want to withdraw from your Bitget account. And now if you head over to ID verification, like I said just earlier, this isn't necessary unless you want to deal in fiat currency or if you want to raise your limits. So initially, your daily crypto withdrawal limit without any ID, so if you have a new account and you haven't gone through the KYC process, then you can still withdraw up to 20 Bitcoin worth of crypto per day. And so obviously having a daily withdrawal limit of 20 Bitcoin or a similar value if you're withdrawing another crypto is already quite a large withdrawal limit. So for the majority of people out there, you wouldn't even need to complete ID verification if you don't want to. But of course, if you do want to complete ID verification, which is the standard KYC process, then that increases your daily withdrawal limit up to 200 Bitcoin per day that you can withdraw from Bitget, or an equivalent value to 200 Bitcoin if you're withdrawing another crypto. So 200 Bitcoin worth of crypto per day if you have completed KYC. And now getting into how to fund your Bitget account. If you go over here to buy crypto, it gives you a few different options for what you can do. First on the list is just a standard crypto deposit, which I'll go over in just a moment. And going down this list, you can actually buy crypto on Bitget with fiat currency. For example, right here, there's an express payment option, or there's also peer-to-peer trading, which is essentially buying and selling crypto to fiat currency straight to and from other users on the Bitget exchange. And on top of these two methods, so express and peer-to-peer trading, there is also a third-party payment option. And if you take a look at this, basically you can choose a third-party service provider and then go through one of these payment options that they give you to essentially buy crypto with fiat currency. And as for the different fiat currencies that are available, there's obviously a wide range of different fiat currencies that you can use to buy crypto with, and you can buy USDT, USDC, Bitcoin, and multiple other crypto straight with fiat currency. But remember, as I said earlier, any of this fiat currency section of the Bitget exchange requires you to complete the ID verification, the KYC. And now to simply deposit crypto onto the Bitget exchange, you can navigate to this buy crypto menu and select crypto deposit, or if you're on this assets screen, you can either click deposit on any of these specific cryptocurrencies or come over to the left-hand side of your screen and press this deposit button, and that brings you over to this page right here where you can select any of the cryptos available on Bitget to deposit. And it's pretty straightforward. Once you select the crypto coin that you want to deposit, you select the blockchain that that coin will be sent on, for example, Bitcoin, and then just below this chain name, it will give you the deposit address, which is essentially the address you'll send that crypto to deposit it onto Bitget. And if you want to deposit another coin, you simply go here and change the coin. You could search for the coin. You basically search for the ticker. So for example, if I want to deposit USDT, then I can do that. Click there, select the blockchain, and it is important to match the chain or the network to where you're actually sending it from. So if you're sending it from another exchange or another wallet, just double check, make sure what network or what blockchain it is actually on in order to make sure you are receiving it and depositing it on the right address. Because, for example, Ethereum addresses are different to Tron addresses. And now when it comes to withdrawing crypto from the Bitget exchange, you simply click this withdraw button right here, which takes you to this page just here. And just like the deposit screen, you simply select the crypto coin that you want to withdraw from Bitget, select the blockchain or network that you want to withdraw on. So for example, if you're withdrawing BTC, you will likely be withdrawing on the Bitcoin blockchain. And then you simply copy the crypto wallet address from wherever you're sending this crypto to. So for example, if you're withdrawing this from Bitget and sending it to another exchange or another crypto wallet, then you would go on that other exchange or that other crypto wallet and copy the address that shows up on that end. And once again, double check it is the right coin and right blockchain or network. And then when you copy that address from the other side to where you're sending this to, you paste that address right here, and you can actually add it as a withdrawal address, which basically means it stays there for next time. And then after that, you select the amount you want to withdraw. It does have a minimum amount that you can withdraw. It says it right here, or you can click the all button, which will basically select your entire balance for that specific crypto. And on this same screen, it shows you the amount you can withdraw per day, which once again is 20 Bitcoin per day if you have not gone through the KYC process. And it also tells you the fee that will be charged for withdrawing, which is just the standard network fee. And for different blockchains, it will be different fees. And so, for example, right now, as of recording this video, to withdraw Bitcoin on the Bitcoin blockchain from Bitget, it's around a $3 fee. But let's just say if you're withdrawing USDT on a different blockchain, such as Tron or the Binance Smart Chain, then the fee is a lot cheaper because the fees on those chains are normally cheaper. So for example, on the Binance Smart Chain, it's only 29 US cents to withdraw. But anyway, once you have deposited your crypto onto Bitget, it will appear in your assets screen, which you can find at the left side of your screen right here or at the top right here. And if you click that button, that will bring you back over to this page where once again, it will show you any crypto that you have sitting on your Bitget account. And you can click this button right here, which says hide zero balance assets. And it's basically an easy way to sort out any of the cryptos that you don't actually hold and show only the ones that you're currently holding on Bitget. And you can see right here that I do have around $1,200 sitting on this account at the moment, around 136 USDT in my spot account, and over in my futures account, I have a little over 1,000 USDT. And in case you didn't already know, spot trading and futures trading are the two most common platforms on Bitget. And the difference between spot trading and futures trading, first of all, spot trading is basically just trading crypto to crypto with no leverage involved. So for example, if I simply wanted to deposit some stable coins onto Bitget to buy some Bitcoin and withdraw that Bitcoin from the exchange, then I would use the spot account and the spot trading marketplace. And then when it comes to futures trading, what you're actually buying and selling on the futures market is not actual Bitcoin. For example, if you're trading Bitcoin, you're actually trading Bitcoin contracts, which you cannot withdraw. They're simply to make profit on the exchange. And then once you close the trade, then you can withdraw any profit that you might have made. And with futures and the futures markets, you can indeed use leverage on these futures marketplaces, which basically amplifies the volatility on your trade. So if you're trading in the right direction and things go well, then you make a lot more profit with leverage. But on the flip side, if things go badly, if the market moves in the wrong direction, then with leverage, that can actually multiply losses. So please be careful with any high leverage. And I'll go into more detail about all of this in just a moment. But first, I wanted to point out that there's actually a demo account available on Bitget. And initially, when you open your Bitget account, you will start off with simulated coins. These are just demo coins, so you can't withdraw these or anything. And you initially start off with 3,000 simulated USDT on your account. account. And you also start off with 5 simulated ETH, 100 simulated EOS, 1 simulated Bitcoin, and 3,000 simulated USDC. And so once again, these are not actual funds. They are not real crypto or real money at all, but they are there on the account so that you can use them to practice trade, to essentially get used to Bitget as an exchange, or to potentially try out new trading strategies that you're not yet comfortable with real money. And so in that scenario, you can use these simulated coins on the demo trading platform, which you can find right here under futures and demo trading. And in fact, if you click that button right there, that will take you over to this page just here. And this page is basically identical to the normal trading platform on Bitget with real money. The only difference, once again, is the S that shows in front of the crypto that you are trading. So once again, if there's an S in front of the USDT, that means you're on the demo platform. You are not trading with real money. And now, if you want to trade the different prices of different cryptocurrencies, you can come up here to the top left, and this right here gives you an option of different cryptocurrencies you can trade. Now, on the demo platform, it's very limited. There's not many cryptos you can trade, but on the real platform, there is a much larger selection between the different cryptos you can trade. And so, for example, right here, there's simulated Bitcoin to simulated USDT. If you click that, that will take you to this page that I'm currently on. And obviously, on the left side of your screen, you have the price chart of whatever crypto you are trading. So in this example, this is of course the Bitcoin price chart. And because this price chart is powered by TradingView, you get all of the different tools and indicators that are normally on TradingView, which is a different charting platform. And just to the right of the price chart, you have the order book, which basically shows all of the current sell orders and buy orders either side of the current market price of whatever crypto you are trading. And you can also select market trade, this button right here, which basically shows you all of the latest trades that have been executed on this platform for this specific trading pair. But anyway, heading back to the order book, this is the default look to the screen. And by the way, you can actually drag the bottom right corner of each of these individual windows and move them around. And you can also grab the top right corner to fully grab the windows like this and rearrange how you like. And then over on the right hand side of your screen, this is where you'll be opening and closing any trades that you want to make on the futures market. So this is the same setup for any of these futures markets, but the spot marketplace looks a little bit different, which I'll cover in just a moment. But first, talking about long positions and short positions, which are essentially ways to make money when the price is going either up or down. If you're in a long position, that means you are profiting when the Bitcoin price, for example, is going to the upside if you are longing Bitcoin. But on the flip side, if you are shorting Bitcoin, if you sell short, that means you make profit when the price goes to the downside. And now when it comes to opening a position, you obviously click the open button right here, and to close a position, you click the close button. But just going back to open so I can show an example. First of all, it is always important to adjust the amount of leverage and type of leverage that you are using. So for example, you can use either isolated or cross margin. And the difference between the two, first of all, isolated uses strictly the crypto that you are putting into the trade. So if you're opening the trade with a certain amount of crypto, then the maximum amount of crypto that you can lose if things go wrong is essentially the amount of crypto that you actually put in that trade. But if you're on cross margin, then under the cross margin mode, it will use other funds that you might have on your Bitget account outside of this trade in order to add more funds to that trade to avoid a potential liquidation. And so obviously, if you're on a cross margin mode without a stop loss, that can be very dangerous if things go in the wrong direction, because it can use other funds on your account outside of this trade. And so personally, I usually use the isolated margin mode, which basically means the maximum amount I could potentially lose in a particular trade is the amount that I actually enter into that trade. But of course, it's completely up to you which one of these modes you choose. And now to adjust the leverage for your trade, you navigate to the top right and you can see the leverage that you might be using for long positions or short positions. And you can actually have a different amount of leverage for long positions compared to short positions. So for example, you could have a long position open with, let's just say, for example, a 5x leverage, and also at the same time have a short position open with a 10x leverage. And now, unfortunately, I cannot tell you how much leverage you should be using because I cannot give you financial advice. So that is up to you. But personally, what I usually use myself is anything around 10 or lower. I rarely use over 10 leverage. Sometimes I might go up towards around 15, but anything much higher than 10 to 15x leverage, and it drastically increases your risk. And so even though you can go all the way up to a 125x leverage trades, that is certainly not something that I would be doing, at least. Once again, I can't give you financial advice, but a 125x leverage is extremely risky, and I'll explain why in just a moment. But first, talking about the different types of orders that you can use, you can of course use a limit order or a market order. They are the two most common orders you can use for futures trading. But you can also click this down arrow right here where it says trailing stop, and that brings out some other options where you can have a trigger order, also known as a conditional order. You can also set up a post only order or a trailing stop for your trade, and I'll talk more about those in just a moment. But first of all, starting off with a limit order, what this means is you can set the price that you want to enter the trade, but that price is not guaranteed to be met. So you are not guaranteed to actually enter into the trade at all, especially if you place the price that you want to enter too far away from the current price of Bitcoin in this example. So an example of opening a limit order trade, of course, this is not financial advice. This is just an example. Let's just say if I want to open a limit order for a long position right here, where we have found a little bit of support that is sitting at around 16,900. And after you place the price that you want to enter into the trade into this first box right here, you then select the amount, so the size of the trade that you want to enter, and you can actually just slide this along. And for example, if you have $3,000 on your account, like this simulated USDT, then you can select 50% of that amount right here with this sliding bar, and that will essentially enter the trade with a size of 1,500 SUSDT in this example. But considering the current leverage is set at 10x, this means that the size of the position will actually be 10 times the amount that you're putting in, because essentially what leverage does is amplify your trade. So to the downside and to the upside, it makes your trades much bigger than they otherwise would have been without any leverage, because leverage is basically borrowed money. And how leverage can actually impact the profits or loss that you're making on your trades, let's just say if you're using 10x leverage, you simply multiply that amount by the percentage move in the price of Bitcoin. So let's just say if you're entering into a long position, which means you're profiting when the price is going to the upsides, then with a 10x leverage long position, for every 1% that the price moves to the upside, you are actually making 10% profits on the amount that you've entered into the position. And so if the price simply goes up 10% with 10x leverage, you are making a 100% gain, which is basically doubling your money. But on the flip side, if the price moves in the wrong direction, so in a long position, if the price goes to the downside just 1%, then you lose 10% of the amount that you entered into the trade under a isolated leveraged mode. And if the price of Bitcoin in this example goes down 10%, then with a 10x long position, you will essentially lose 100%. You will be wiped out of that position, which is why leverage can be dangerous if you use too high leverage. So for example, 100x leverage means you are making a 100% gain or a 100% loss if the price just moves 1% in either direction. And so now I'm sure you can understand why 125x leverage is extremely risky, because with that high leverage, all it takes is less than a 1% move in the wrong direction in the price of whatever you're trading to completely wipe out the trade. But anyway, let's just continue with this example, opening a limit order, 10x leverage at an entry price of 16,900, using about 1,500 simulated USDT for the example. Now, just before opening the trade, personally, I always place a stop loss, and oftentimes I also place a take profit, because usually I like to know where the trade is going and have a plan in mind before even opening the trade. But anyway, I'll just place a stop loss in this example. Let's just say if the price of Bitcoin breaks below this area of support, below around 16,700, in that case, I might want to be stopped out of the trade to avoid any further losses. And so I would simply put 16,700 into this little stop loss box. And what you can also do before even opening the trade, before clicking buy or sell, what you can also do is navigate up here just above these leverage functions. You can find a calculator, and if you simply type in all of that information that I just went through, so the amount of leverage that you want to use for the trade, the opening price of the trade, the price at which you want to close the trade at, the current price of the asset, so the current price of Bitcoin in this example, and the amount of Bitcoin that you are trading, so the size of the trade, which I put in this area once again, 50% or 1,500 SUSDT in this example. And then with that calculator, you can basically click calculate, and then that works out the amount of profit that you would potentially make under that trade and the return on equity or return on investment for that trade as well. And what you can also do with this futures calculator is go over here to close price. You can calculate the closing price that you want to close a certain trade at, or go over to the liquidation price and put in all of that same information to find out at what price your trade would be potentially liquidated, which means you would lose that entire trade, and that is something to keep in mind. And by the way, generally speaking, the lower the leverage that you use, the further away the liquidation price will be from your entry price, which gives you more room for error with lower leverage. And with higher leverage, generally speaking, this moves your liquidation price closer to your entry price, which makes less room for error and makes it more likely that that trade could potentially be liquidated, which means wiped out. But anyway, now that I've put in all of this information, so for this example, I will be opening a limit order at an entry price of 16,900 using 50% of the funds in this particular account, which is 1,500 SUSDT. And I've got a stop loss at 16,700. And actually, I'll just put in a take profit at, let's just say, 17,300 at this high right here. And so now that all of that is ready to go, just for this example, I will click buy long, and then it pops up this order confirmation window, which basically tells you all of the prices and things that you've just entered. So your entry price, your leverage, all of that information to make sure what you're doing. And it also tells you your liquidation price. So in this example, for this trade, if the price of Bitcoin goes all the way down to 15,280 approximately, then this trade would be completely liquidated, which means the entire trade, so 1,500, would be wiped out. But remember, that is why I would place a stop loss at 16,700, so I'm taking a much smaller loss rather than getting liquidated. And by the way, this little T logo is just the logo for Tether USDT. But anyway, if I'm happy with all of that, I simply click the confirm button, and that places the limit order on the chart, which you can see right here. And it is important to mention that in this example, a limit order is not currently an active trade. This is simply an order waiting to be executed. And you can see this information if you scroll down below the chart area. You can see open orders, and this is the open limit order. And it's in this area where I can actually press cancel if I don't want that order anymore. Or if you actually look at the chart itself, you can move this around and that changes the entry price for that position. So for example, I can move that up to around 17,000. And as you can see, that canceled the previous order and submitted a new order at an entry price of around 17,000, where I just dragged it to on the chart. And in fact, from this chart window right here, you can actually press that X right here to cancel the order. And I'll just do that right now to show you. As you can see, that's disappeared from the limit order window down the bottom of the screen. And just so you know, a limit order like that example just there does not use any fees. There's no fees to open the order unless the trade actually executes. So if the price went down to that entry price that I set and opened the trade, then there would be a fee charged. And as for how much those fees are, if you go over here to the futures information, click this down arrow right here, you can see that the current maker fees are 0.02% and the current taker fees are 0.06%. And in case you don't already know the difference between a maker and a taker, first of all, a maker provides liquidity into the order book, which means a maker, for example, is a limit order, because when I just set up that limit order with an entry price below the current Bitcoin price, then that actually enters into the buy side of the order book, waiting to buy Bitcoin, but hasn't yet bought Bitcoin. So that is providing liquidity into the order book. And if it executes as a limit order, then that will be charged the maker fee at 0.02%. And a taker fee is basically if you're submitting a market order, which takes liquidity out of the order book. So for example, if I open a market trade, which I will do right now as an example, that actually takes liquidity out of the sell side if I'm buying, or takes liquidity out of the buy side if I'm selling, because a market order is simply opened at the market price, which means the closest buyer or seller to the current market price. So let's just say if I was opening a market order long position, then I would be buying immediately from this lowest seller right here. Or on the flip side, if I was opening a short position using a market order, then I would be selling straight to the highest buyer, the highest bidder right here in the order book. And now continuing with this market order example, once again, I don't need to put in the entry price. It automatically chooses the entry price for me at the market price. But I do have to type in the size of the trade, which is basically the amount that I want to trade with times by the leverage. And once again, you can use this sliding bar if you want to. Otherwise, you can put in a specific amount into this box. And right now, it's currently showing this amount in SBTC, so simulated Bitcoin. So for example, if I put in 1, then the total size of this position will be whatever the Bitcoin price is, and the total amount of money that it will use out of my account is 1,888 simulated USDT, which is about 1/9 of 1 Bitcoin as of recording this video. Because remember, this is due to the fact that we're using 10x leverage, which makes up for the other 9 times of this cost that I'm putting into the trade, which brings it up to a total position size of 1 BTC, or in this case, 1 simulated BTC. But I can actually click this drop down arrow right here and make it a little bit simpler. And I can select nominal value, for example, which shows the total amount of the trade in USDT, or in this example, simulated USDT. So now, for example, if I want to have a $10,000 trade, that will cost me $1,100 to actually open that total size trade, because remember, in this example, I'm using a 10x leverage. And just for something different compared to the previous limit order example, if I open a short position this time to show you how that works, first of all, I would need to readjust the take profit and stop losses, because remember, in a short position, the profit is made when the price goes to the downside, which means you want a take profit somewhere below the current price and a stop loss above the current price, because remember, you lose money if the price goes to the upside if you're in a short position. So just for example, example, if I place a take profit price somewhere around this support, let's just say around 16,800, and a stop loss price which will exit the trade at a small loss if the price, let's just say, goes up to 17,300 for this example. Remember, this is not financial advice. This is just an example. And now that this is all sorted, I can click sell short to open the short position at the market price with 10x leverage. And you can see right here, based on the current leverage and the size of the position, the liquidation price for this specific trade in this example is sitting at just above 18,600, which means in this example, if the Bitcoin price goes up to this liquidation price and crosses up above it, then this entire trade, this amount that I've entered into the trade, 1,100, would be liquidated. It would be wiped out. But anyway, if I'm happy with all of that, I can click confirm, and straight away that opens the trade at the market price. There is no waiting around with a market order. And now if you scroll down to the bottom of the page where you can see your orders, in the position tab, you can see any active orders that are actually active right now on your account. And you can see all of the information about this order, the open price, the margin that you're using, which is basically the amount that you are risking, the amount that you've placed into the trade. And over on the right hand side, you can see any realized profit or loss, any unrealized profit or loss. So for example, already I've made roughly around $6 unrealized, of course, which means this profit is not confirmed until I close the trade. And now to close the trade, what I can do is close part of the trade if I want to. So for example, I can click right here and that brings up these options. I can close 50% or I can close a specific amount, for example, 0.2 BTC, or in this case, simulated BTC. And by the way, the total position size you can see on the left right here is 0.57. And so 0.2 is a little bit under half of this position. And if I click the close button, it will close it at the market price all in one go. If I press confirm, then you can see right here that that has just realized some profits, and the size of the position has gone down by that amount that I just closed. And so essentially by doing that, I've just secured some profits. And by the way, to actually edit any take profits or stop losses while your trade is active, you can go into this open orders tab at the bottom of the screen and then click take profit and stop loss order right here. And then from this screen, you can click this little pencil icon right there and click this understand button to actually edit the stop loss or take profit if you want to. And now to close the entire position, you can either go back to that position page that I was just on and close 100% of the position, or you can go up here and place a close order. And of course, you have the option between choosing market or limit order, for example, to close this trade. So for example, if I wanted to close this trade with a limit order, then just like earlier with opening a limit order trade, I can place the price in here, but this right here will be the exit price, not the entry price. And by the way, to close a short position, you essentially need to buy back into the market, and to close a long position, you essentially need to sell that long position. You need to sell into the market. And what this means for a limit order is basically if you're placing a limit buy order, it needs to be set below the current price. And if you're setting a limit sell order, it needs to be set above the current price. So to close a short position, once again, I need to set a limit buy order to close the position. And that would mean I would need to set this price below wherever the current price is sitting at. So for example, I can set this at 17,000, which is currently below the Bitcoin price as of recording this video. And if I want to close 100% of the rest of the trade, then I can slide this all the way over to 100% and simply click close short, which will bring up this confirmation window once again. And if I'm happy with that, I can press confirm, and that places a limit order on the chart, as you can see, which kind of acts as a take profit as well, because obviously this is below the price and I can set this wherever I want. Once it is set up, once it is on the chart, I can drag it around and change where it is. But of course, if I want to get out of the trade straight away and not through a limit order, so if I cancel that limit order and if I want to just exit the trade straight away, then I'll use a market order, which executes immediately at whatever the current price is. And just before doing that, I'll quickly explain that you can actually place a trailing stop loss order while the position is open under this close tab, which is basically a type of stop loss that continues to move up with the Bitcoin price if you're in a swing trade, for example, if you're trading during an uptrend, and if you don't want to continue to monitor your position and basically just set it and forget it, you can set up a trailing stop loss if you want, which you can have trigger at a specific price point. Let's just say in a short position where the price is going to the downside, this could trigger somewhere around 17,000, for example, and then you set the callback rate, which is basically the amount the price moves backwards against the direction you are trading, and you can set this all the way up to 10%. And so, for example, let's just say if I set this at 1%, what that actually means is once the trailing stop loss is activated, so once it crosses over the trigger price, if it then retraces 1%, then that will automatically close the trade. It will stop me out of the trade if I set the callback rate at 1%. Now, if I want to have a more loose trailing stop loss, then of course I can increase this callback rate, which makes it so the Bitcoin price can retrace a little bit more, for example, up to 4 or even up to 10% before this trailing stop loss actually closes the trade. And you can also enter an amount for the trade, so you don't actually need to use this for the entire trade. If you don't want to, you can just have it so it closes half of the trade if it pulls back a certain percentage, which is a useful tool to know about. But anyway, just completing this market order for the sake of this example, if I take this all the way to 100% and click close short, it brings up that final confirmation window, and if I click confirm, it exits the entire short position all in one go. And for a conditional order, if I click the open button and hover over this arrow right here and click trigger, which is actually a conditional order, trigger order, conditional order, that's the same thing. And generally speaking, when I personally open these trigger orders, I always use a market order rather than a limit order, because with a limit order paired with a trigger order, it's very unlikely the order will even be executed. It's very unlikely the trade will even open. And basically what a trigger order or conditional order actually is, it essentially allows you to place a buy order somewhere above the current price or place a sell order somewhere below the current price. And now you might be thinking, why would you want to sell Bitcoin below the current price or buy Bitcoin above the current price? And a potential answer to that question is, let's just say if we're getting close to breaking above some key resistance and you don't want to enter the trade straight away because let's just say in that example, we haven't yet broken above that point of resistance, then a potential tool that is available is a trigger order / conditional order, which basically allows you to place a buy order sitting at a higher price, for example, above resistance, which can potentially take advantage of a breakout move, or if we break support with a short position placed below support, for example. Because with a standard limit order, remember, you can only place buy orders below the price, not above the price, and you can only place sell orders above the price, not below the price. But with a trigger order, you can place orders basically anywhere you want. And once again, for the execute price, I always click market order. That's just my personal preference, not financial advice. And then for the trigger price, you can basically place this wherever you want, to the upside or to the downside of the price of Bitcoin. And then once again, you can type in the size of the trade or simply drag this bar right here. And after that, of course, you can click either buy long at that specific trigger price if the price gets there, or sell short at a specific trigger price if the price gets there. That will trigger that trade and open that trade. And you can also click this square right here to place in a take profit or stop loss in advance. So these won't even be active, but they will be active once the trade eventually executes and basically opens. So when opening one of these trigger orders, it is very similar to opening a limit order, so it doesn't immediately immediately execute. But remember, with a trigger order paired with a market order in this section, you can place the trigger price anywhere, and the moment the Bitcoin price in this example reaches the trigger price, it will execute and open that trade. And also, just as a side note, if you want to change your screen between dark mode and light mode, you can click this button up in the top right and select either light mode or dark mode if you want to. By default, I think this usually is on light mode, but personally I prefer dark mode. Obviously, that's up to you. And remember, this is all on the demo account using simulated USDT, which, by the way, you can find these demo accounts here in this list as well. But in order to trade with real funds, you would essentially need to click on one of these options up here, either USDT margined futures, coin margin futures, or USDC margined futures. And the difference between each of these options are basically the margin or the funds that you are using to fund or open the position. So for example, with USDT margined futures, you are using USDT stablecoins to open the position, and also all of the profits for that position are paid in USDT to you. And USDC margined futures are very similar. It's just paid with USDC. That's how you open the position, and any profits you make from those trades are paid in USDC stablecoins. But with coin margined futures, the funds that you are using to open those trades are whatever coin you are trading. So for example, if you are trading Bitcoin, then you need some Bitcoin on your account to open that Bitcoin trade. It uses the actual underlying asset to open the trade in coin margined futures, and also all of the profits paid out of any of those trades under coin margined futures are paid in that same coin that you are trading. And also, you can see here under coin margin futures, there's actually two options. There's coin margin perpetual futures or coin margin settled futures. Basically, the difference between those two, first of all, coin margin settled futures have an expiry date. You're basically betting on the price of a certain crypto asset like Bitcoin or Ethereum, for example, to be at a certain price by a certain date, which can be quite risky. And then perpetual futures are basically trades that can continue to remain open, kind of like the demonstration that I've just done. Those trades that I've just done here could have continued to remain open for a much longer period of time if I wanted them to. And in fact, if I click on one of these options, for example, USDT margin futures, that will bring me over to an almost identical screen. As you can see, it's basically the exact same process to use real USDT, real funds. It's just the only difference is that little S in front of USDT, so make sure you look out for that. And also, as I said earlier, outside of the demo account, when you're using actual funds, there's a much larger variety of coins that you can trade, all with USDT being the underlying asset if you're on USDT margin futures once again. And also, what is interesting about Bitget is that they are one of the largest copy trading platforms in the crypto world. So if I click that copy trading button right there at the top of the screen, that takes me over to this page where I can find the top traders on Bitget and how much profit they are making. And what you can do if you want to is actually follow these traders. You can actually follow their trades on Bitget to see what they are doing. And so, of course, this is just another option out there as well. And as always, consider any risks involved, because clearly you don't want to just follow a bunch of random people without knowing who they are. So just make sure that you do some research into any of these traders that you might want to copy, for example. But I'm just letting you know that this is a potential option to keep in mind, a massive copy trading platform. And now when it comes to spot trading, right now, as of recording this video, there's actually 0 fees on the entire spot market, which means you can buy and sell any sorts of crypto. And with those crypto to crypto transactions over on the spot market on Bitget, once again, there's 0 fees. So if I click that button right there, that will take me to this page where I can see a massive number of different trading pairs. Of course, there's many different different coins paired to USDT, which means you can buy these coins with USDT or sell these coins into USDT. There's also other pairs, for example, against USDC, and even Bitcoin pairs. You can sell altcoins into Bitcoin and Bitcoin straight into altcoins, for example, if you want to, or you can simply click this All tab, and that gives you an entire list of all pairs. And of course, you can search right here for any coins that you might want to find. And on top of that, you can also click the star to actually favorite any pairs that you normally go to or you normally use, and just use this favorites tab, which is useful. And now when it comes to buying and selling different coins on the spot market, it's very straightforward. It's a lot easier than the futures demonstration. First of all, starting off with a limit order example on the BTC to USDT pair. And once again, like on the futures market, I can place the price that I want to buy Bitcoin at. Remember, if I'm buying Bitcoin with a limit order, that price needs to be below the current price of Bitcoin. Or if I'm selling Bitcoin with a limit order, the price needs to be somewhere above the current price of Bitcoin. And then I can type in the amount of Bitcoin that I want to buy or sell right here. And as for these different order options, there's good till canceled and post only. Those are the two most common options that the majority will end up using. Basically, good till canceled for a limit order means the order stays there essentially forever until it eventually gets filled. And with a good till canceled order, it can actually execute as a market order potentially. If you, for example, put the price in this box above the current price, that will just buy at the market price and execute as a market order if you have good till canceled turned on. And then with post only, that ensures that it executes as a limit order, which means if you place this price right here above the price of Bitcoin, it will essentially cancel the trade. It won't even open that order at all. And there are these two other options. There's immediate or cancel and fill or kill, but basically these are very uncommon for the majority of traders out there, but obviously they are other options if you want to use them. And then to find the market order, you actually stay under this limit order tab, and over here you press this down arrow right here and select market order if you want to buy Bitcoin at whatever the market price is when you press that buy button. And of course, it's the same thing if you want to sell Bitcoin immediately at the market price, you click market order just like that. And remember, no matter if it's a limit order or market order, at least as of recording this video, all trades on the spot market, specifically on Bitget, are zero fees. There's no fees for all spot trades on Bitget right now. And of course, there's also a trigger order if that's another option you want for spot trades, where once again, you can put in the trigger price, which is the price it will activate that trade. And then once that trigger price is met, it can either activate a limit order, which just places another limit order on the chart, or once again, I usually use a market order paired with a trigger order if I'm using a trigger order, that is, because basically that would mean as soon as the price reaches the trigger price, or this conditional price is what it's called on some other exchanges, then if it's paired with a market order, that will immediately execute the trade all in one go. And of course, you put in the total amount that you want to buy if you're buying, or selling if you're selling, of course. And over on the right hand side of your screen on the spot market, there is the order book and recent market trades if you want to find those as well. And also, I forgot to mention this earlier, but if you want to move your funds between your spot account and your futures account, for example, it's as simple as going into your assets screen, which once again can be found up here in the top right, and then going down to whatever crypto you want to move back and forward. Let's just say if you want to move some USDT from the spot account into the futures account to trade on the futures market, you basically just click this transfer button right here, and then you can transfer from the spot account, from the spot market, over to the USDT margined futures, which of course ends up over in the futures account. If you click that button right there, it will end up over here, which then you can use those funds for the futures market. And then to transfer any funds back over to the spot market to actually withdraw withdraw if you want, you simply go into this futures account right here on the assets screen, click that transfer button on the right, and then you can transfer from USDT margined futures. That's what that little M is for. And you can transfer into the spot market, and you can actually switch these around if you want. And once again, in order to actually withdraw from Bitget altogether, the funds need to be in the spot account in order to click withdraw here or over here on the left. And on top of everything else that I've talked about so far throughout this tutorial video, there's also automated trading strategies available on Bitget right here. Or if you hover over the spot market list right here, underneath spot trading, you can find spot grid trading, and heading over to that page right now, this is a way to actually profit from crypto during a choppy sideways price range. So for example, if I select normal grid right here, there's actually an auto-generated AI strategy that appears right here, and that's simply based on the last 7 days worth of data, the last 7 days worth of price action. And if I'm happy with all of that, what I can do is put in the investment amount, which comes out of the spot account, or I can raise this percentage bar right here. So for example, 50% of my current spot balance is a little over $60, 60 USDT. And then I can click create strategy if I'm happy with that. Otherwise, I can click manual creation, where I can put in all of those numbers manually, and so they're not auto-generated. And how this actually works is I put in the lowest price of a certain price range. So for example, I could enter something like 15,500, once again, around the lowest of a certain price range. And then you type in the highest price in a certain price range if we're chopping around sideways. So let's just say 17,500, for example. Of course, none of this is financial advice. This is just an example. And then you type in the number of grids, which is basically the amount of buy and sell orders in between this price range. So basically how it works is it places a bunch of buy orders in the lower half of the price range. So in between the current price and the lowest price, it places a bunch of different buy orders. And then between the current price and this highest price that you enter here, it places a bunch of sell orders automatically. And so essentially this is an automated strategy that buys low and sells high during a choppy sideways price range. Now, this isn't usually a good strategy for a major uptrend or a major downtrend. Once again, this usually works well during a choppy sideways price range where the price is not really trending in either direction. And just to complete this example, I could, for example, place in number of grids, let's just say 16, and it has here profit per grid, which is basically the profit between each of those buy and sell orders that will automatically be placed in this price range. And with 16 grids, that's basically 16 orders in that price range altogether. So for example, 8 buy orders and 8 sell orders throughout this price range at equal distances. And then just like the AI strategy, the auto-generated strategy, you simply place in the investment amount, so the amount that you want to put into this grid bot out of your spot account balance. And then with that amount, it simply buys Bitcoin and sells Bitcoin at those particular prices, constantly in between this price range, buying low and selling high. And of course, this is not just available for Bitcoin. You can come up here to the top left and see multiple different assets that you can set up these grid bots on. Bitcoin, Ethereum, you name it. You can search for the coin right here if you want to. But anyway, that is all for this Bitget tutorial video. I really hope you enjoyed or got something useful out of this video. And if you did, please make sure to leave a like down below and subscribe to the channel if you're new. And I'll see you all in the next video.